CryptoWendyO show. We have to talk about an emergency Ripple update with the settlement because the SEC is being an absolute mess. Absolute mess. Plus, the SEC is currently having a meltdown, which makes sense. A lot of people are leaving the department. We don't know what's going on. We can just speculate. But at the same time, we're going to talk about all of it. I hope you had a beautiful Father's Day weekend. I had a good weekend. I ate like a whole loaf of bread on, I think Saturday night, something like that. But yeah, it's going to be fun. We got an exciting stream. Also too, really quickly, apparently a lot of the celebrities are launching like more rugs on Solana. And again, this is not a Solana problem. This is a human problem. So don't blame Solana for this. Just stop trading this crap, really. But what I'm seeing what's happening on Twitter is that these celebrities are like tweeting, they're talking, and they're getting hooked up with scammers, like legit scammers, like people that are helping them rug pull. And Raider is really good at spotting a lot of this stuff. But basically what happens is that they'll launch tokens and a bunch of people will snipe it. And then they'll have the celebrity put out the tweet. So if you don't know how to check wallets and you don't know how to check this type of activity, probably don't get into it any way, shape or form. Like, I feel like there needs to be a healthy balance between the celebrity taking accountability and the person that's putting money into it taking accountability. Why? Well, because you can't just blame one party. Like, you still are the one that's putting money into it too. So I feel like there's a healthy balance with that. So I feel like we just kind of need to do a better job as a whole, making better choices. I mean, should they be doing these? No, they shouldn't. It's wrong. I'm not excusing it. I'm just simply saying we do need to take accountability for our actions as well. I think that's important on both ends. But with that being said, let's get straight into the news. We got to talk about oh, also too, before I do that, Lo won this for me over the weekend when she brought it home. And she said that she got me a gift. And this thing smells like coffee. Like, she brought it home and me and Dee are like, oh my God, it smells like coffee. So that's why this is on the thumbnail, is she wanted this to be on the thumbnail. She's like, this needs to be the new mascot of your show. So of course, if my baby tells me to do something like this, we're going to do this. But anyway, it's been kind of a hot mess this morning. My hair is not done. This is her natural state over here. Honey, I've been on TikTok. Where have you been? I've been making content on TikTok since 2020, honey bunny. Anyways, let's get straight into it. The SEC shuts down Ripple's argument for a lower penalty. So if you don't remember what happened last week, I'll talk to you about it. So Do Kwon and Terraform Labs, the Terra Luna people, they basically are like, hey, we'll go ahead and pay you the $4 billion settlement. So, we did a bunch of bad stuff. Now, that being said, Ripple was like, hey, we didn't do anything bad any way, shape or form. So we don't want to pay a $2 billion penalty. We want to pay you like 10 million. We think that's fair because we may have made mistakes with institutional investors. But your whole point is that you're supposed to protect retail. So if you're here to protect retail, why do we need to pay you $2 billion when Terraform really kicked off the entire crypto contagion, was in cahoots with all of these bad crypto founders that lied to everybody? So why do we, and we didn't have anything to do with that, why do we need to pay you $2 billion? And the SEC is like, no. You're going to pay us, which is a mess. It's ridiculous. It is absolutely ridiculous. And maybe the SEC is doing this because they're asking for like a $2.3 billion budget from the Senate and Congress and all the other public servants. And they're like, no, you don't need it. We're giving the CFTC $400 million. Why do you need $2 billion when you can't even do your job? That's exactly what happened in a nutshell. But basically, Ripple requested a penalty of no more than 10 million, citing the SEC's settlement with Terraform Labs as president. And again, case law matters. Case law matters. Repeat it after me. Case law matters. SEC proposed penalties for Ripple were $2 billion, which why should they pay $2 billion? They've already paid $300 million in attorney fees plus. But why? So the SEC argued that Terraform's $420 million penalty was justified given its gross profit from volatile conduct, contrasting with Ripple's penalty. And I agree with that. I don't know what that means, but okay. Was it hawkish rates? I don't know. Anyways, with that being said, Ripple didn't do bad things like Terraform did or Do Kwon did. They didn't do bad things. The SEC also criticized Ripple's comparison, stating their proposed penalty would not meet the statutory purposes, which makes no sense. Okay, which makes no sense. So Ripple is not being treated fairly. The XRP community is not being treated fairly. Well, legit bad actors that have done bad things, they're getting away with it. Well, they're not getting away with it because they still have to pay a lot of fines. But why are we punishing a company that has been trying to come in and register, trying to comply, trying to ask for help, that has paid over $300 million defending their position, that is happy to pay you a $10 million fine, wipe their hands and go back to business? Why are we still attacking them? They've already moved part of their business out of the United States of America. They're making partnerships with so many different banks and so many different traditional financial entities across the world. They are still doing business in America, but not to the capacity they were before because of the SEC. And again, this precedent here is dangerous because what it's doing is showing companies in the US like, hey, if we make a mistake because we don't really know exactly how to comply with your laws and regulations, you're going to sue us and we can be on the hook for billions and billions of dollars. So people are like, I don't want to make companies here anymore. And I actually have a friend that was going to start a company here and was in the process of doing it and then said, you know what, I'm not going to. I'm going to step down. And he let the rest of the guys continue to do it because he doesn't want to deal with the risk. And I don't blame him. It's scary. So that's what's happening with XRP. And this is why I'm voting for a pro-crypto candidate. This is why I want John Deaton to get Elizabeth Warren out of office. This is why I'm doing all of these things. And we're going to talk more about what's happening with Wall Street Journal, because Wall Street Journal put out a really excellent article. I actually want to cover that first. Also, too, if you're here, smash a like. Smash a like. We've got over 200 people here on YouTube, 100 on TikTok. Somebody says, I understand it's just your opinion. Is the crypto bull run barely started over? It's a 4-year cycle thus far. But I need y'all to comment in the chat and smash a like. We have almost 300 people here on YouTube now, so I need y'all to smash a like, okay? Smash a like. Get it up, get it up. We also have a poll at the top. What is your top crypto pick? BNB, XRP, Shiba Inu, Avalanche. All right. I do want to cover this story, though. Is it on Wall Street Journal? No, it's not this one. It's over here. Over here. Cancel. Where did it go? Where did it go? No, it's not this one. This Wall Street Journal. Crypto could stave off a U.S. debt crisis. Stablecoins backed by dollars provide demand for U.S. public debt and a way to keep up with China. I don't think that this is the way that it can be that we can fix the U.S. economy is with stable coins, and I'll explain to you in a minute. Let me go ahead through and read this to you, just so we are all on the same page. I'm a little bit misorganized today because that's what we do here. We're a little bit unorganized. We're just like here. We're just doing things. All right. So this is an opinion piece from the Wall Street Journal, which again, it's an opinion piece. It doesn't really mean anything. It's somebody's opinion. So basically they're saying that U.S. faces a debt crisis driven by entitlement programs and lack of fiscal solutions. No, we have a debt crisis in America because we have public servants that continue to print money. We have public servants that continue to spend money to send it here, there, to your mom.com and take zero accountability. That's exactly what's happening. Okay. We have so many, and also too, we have so many programs that are just not programming, that are just not working. The homeless crisis in California, I think we missed like $2 billion or something like that. I don't even know at this point anymore. But like we're continuing to see all this insanity happen. Okay, all of this insanity happen. But it's more so we keep printing money and we're not balancing the budget. Stablecoins backed by the dollar emerging as significant purchasers of U.S. government debt. So basically, we're going to use stablecoins to buy debt, that's not going to fix it. It's not going to fix it at all. It's really not going to. Dollar status as the primary international reserve currency provides benefits like cheap fiscal funding and global financial influence. China is aggressively promoting its digital currency to challenge the dollar's dominance. Dollar-backed stablecoins can enhance demand for U.S. debt, mitigating risks like failed treasury auctions. Regulatory clarity for stablecoins enjoys bipartisan support in Congress, offering potential benefits amidst political challenges. It doesn't. So the whole piece about the bipartisan support for stablecoins, the red people are like, no, we don't want CBDCs. And then the blue people are like, yes, we want CBDCs. But then if you actually read some of the bills by the red people, they do want CBDCs. And that's what they're alluding to. So both of them are lying to you. Bam. How do you like that? That's exactly what's happening, and that's problematic. So can crypto save the U.S. debt? 100%. It can help, but it's not the way that this article is reporting. This article is reporting to buy debt and to do this and that and to do a bunch of funky business, to do a bunch of shenanigans. No, you want to know the way that you solve debt? Is like you use crypto to like generate revenue, like create jobs, like stimulate the economy, like that type of stuff. That's what you do. You don't allow independent agencies like the SEC to sue companies. You don't, and push them overseas. That's what's happening. Also, too, we have a quick segment from our partners over at iTrustCapital. Are you excited about the crypto bull run, but buying your crypto on a centralized exchange? Well, I hope you're reporting all of your crypto gains to the IRS because they want your taxes. That's right. When you buy and sell crypto on a centralized exchange, you need to pay the government taxes when you make profits. Sounds pretty taxing, right? Well, there's another way you can buy and sell crypto without worrying about taxes. But please go ahead and verify with your local tax professional first. At iTrustCapital, my partners, you can buy and sell crypto inside of a tax-advantaged crypto IRA. Crypto IRAs are retirement accounts that work similarly to an exchange, but with tax benefits. Let me give you a quick example. If you buy and sell crypto on a regular centralized exchange and make $20,000 in profit, you have to pay the government taxes. However, if you buy and sell in your Roth IRA and make $20,000 in profit, you don't need to pay any taxes. Yes, you heard me right. You get to keep all of your profits and not give the government any of your money. Opening a tax advantage IRA at iTrustCapital only takes a few minutes. You have 24/7 access to the markets with some of the lowest fees in the industry. And the crypto bull run is just getting started. And of course, people are starting to see their accounts go up. So take advantage of the tax benefits of an IRA at iTrustCapital and start maximizing your crypto investments today.
All right. Now, I want to talk a little bit more about Tether and stablecoins. I know I've switched up the part of the show a little bit, but you know what? We have to talk about it because this is all relates in relation to each other. We're also going to talk about runes. So stick around for that because runes are printing. Somebody actually just dropped me a project name this morning. It launched 2 days ago. And no, it wasn't Gamer. Gamer's always dropping me projects, but we'll talk about that. My little baby. That smells like coffee. But let's get into the story with Tether. There's a couple Tether stories that we do have to talk about. Stablecoins, since we're there. Tether launches a token supported by Swiss stored gold as part of a new line of synthetic crypto. They said they're unveiling a new category in synthetic digital assets, starting with a new token called AUSDT. What? The new token is supported by real physical gold stored in Switzerland, Tether said. Are they bringing back the gold standard? AUSDT is designed to track the value of $1, and Tether plans to integrate it into new digital asset tokenization platform, which is going to be launching soon. And if you guys don't know what the gold standard is, let's go ahead and cover it, because until I joined crypto, I didn't know what the gold standard was. So the U.S. adopted the gold standard in 1900, linking the value of dollar to gold. Cash was essentially backed by gold. Cash could be redeemed for gold coins at a fixed price by the government. It ended during the Depression of 1933 to boost the economy. After World War II, a new gold standard linked major currencies to the U.S. dollar, convertible to gold until 1971. When this convertibility was halted by Nixon, this was the end of the gold standard in the U.S. So I think that we should have the gold standard. I think that we should have dollars that are backed by something, not just printed out of thin air, because we see that really happen. We see it happen. We see these dollars that are printed out of thin air and they're not backed by anything. What's backing it? Some people say war. Some people say this. Some people say your dad. I don't know what's backing it. I have no idea. All I know is I pay a lot of money in taxes. My purchasing power is going down. Interest rates are high, and rent is outpacing wage by 1.5 times. That's what I read today also. So whatever we're doing now, that is not working. Okay. It's just not working any way, shape, or form. And that's problematic for me. It should be problematic for you too. It should be. You should be upset. Thank you guys for all the gifts and the flowers and the stuff. I appreciate it. But you should be concerned and you should be upset with this. You really should. It's upsetting. And I don't care. Like, this is the thing. It doesn't matter how wealthy people get. And this is another reason why I'm not big on raising taxes for millionaires, because in 10 or 20, 30 years, I don't even know. But taxes might be like those wages, like back in the 80s, $100,000 was a lot of money. Okay. And now $100,000 about 40 years later, like to live comfortably in California, you need like $300,000 a year, I believe, in some areas, which is crazy in New York, Maryland, like all these crazy areas. And if we continue to raise taxes on wealthy individuals, by the time our kids become, by the time they're done with college or they start a business or whatever it is, they're the ones that are going to be footing the bill. And that's not fair. They shouldn't have to. They shouldn't have to. I feel like there's a healthy medium, but the gold standard, I feel like should come back in some capacity. We should know how much gold the public servants have. We can tokenize it. And that's exactly what Tether's doing. So it's going to be interesting to see what happens to America in the next couple of years. It really is. But with that being said, let's get into this next story here. Wall Street is greedy. Tether co-founder predicts next ETFs after Bitcoin and Ethereum. So again, we've got some more news on Tether. And some people call Tether a scam. Some people love it. Me personally, don't care. Hold Tether, hold USDC. They're both centralized. Okay. Is what it is. So while Wall Street interest has boosted the overall crypto market, William Quigley said it also brings risks. Let's read it. So Tether co-founder Quigley predicts ongoing momentum in crypto ETF approval by Wall Street's profit motives. Anticipates ETFs for cryptocurrencies like Solana and Cardano. That would be great because I hold both of those. I would absolutely love to see more crypto ETFs come afloat. But he did warn if institutional investors withdrawing during the market downturns despite ETFs boosting Bitcoin price earlier this year. So basically, it would just be like with these ETFs, it would just be adding more investors, more TradFi people, which fine, cool. You guys can come into the industry. Don't care. But at the same time, we can actively hold the Solana and the Cardano and all the other crypto assets. And my only concern for the ETFs is that more ETFs we get, it's really going to force the public servants to say, you know what, you don't need to be able to custody your own crypto because we can use the ETFs. But hey, if it's going to pump my bags, let it pump my bags. I'm all here for it, honey. I'm all here for it. All right. I want to talk a little bit about altcoins and then we'll get back to Mr. B because we like we like altcoins. But before we do that, I do want to cover this story with Bitcoin because it's kind of cool. So oh no, that's runes. We'll talk about this one over here. What's this one over here? Now let's go ahead and take a look at crypto. So this is going to be the weekly. I don't know what the hell this token is here. This is we'll take a look at the top 100. So this is the top 100. Everything besides TON is down. TON, ENS, and LIDO. XRP is up. This is what we're looking at here. What's going on? What's going on? There's so many derivatives of PP, which is so funny. I'm going to talk about all of them because I think it's ridiculous. But with that being said, GALA is down 20%. We're seeing some big downs. Some reds. We don't like this. That's on the weekly. But again, the daily it's going to be a little bit less. But on the weekly, not looking good. Not looking good. Now, with that being said, yeah, I'm going to make it feel better. I'm going to take something today. Now, with that being said, taking a look at the weekly. Okay. So this is going to be the weekly. This is going to be the weekly over here. All right. So we didn't close above the $66,000, the $67,000. It makes me a little bit sad. It makes it a little bit sad. A little bit sad. Okay. So we didn't close above 67,000. We are kissing the Bollinger Band simple moving average. That's about 65,000. The weekly does look bearish. So I wouldn't be surprised if we did see $60,000. If we break down below $60,000, that's not going to be good. Okay. And again, we do have an area at $50,000. I'm not saying we're going to, but I'm saying it does look a bit toppish. So I would just be cautious. I would prepare for that. Have a bullish scenario and a bearish scenario. So do whatever works for you. Prepare for that. Taking a look at the daily is holding on for dear life to $65,000, or we'll say 64,000 over here. Okay. Holding on to dear life. It does look like we kind of bottomed out, but not sure yet. Now, taking a look at the 4 hour is bouncing, 4 hours fighting for her life, but we have heavy resistance here at $66,000. Also, please don't be using crazy leverage. And we are partnered with ZoomX if you'd like to trade with us. ZoomX is really cool because they're giving up to $40,000 in bonuses, and they have a centralized version and a decentralized version. So if you've been around the block, you need to use the decentralized version and take advantage of those bonuses. The link is going to be down below. So that's going on with Bitcoin. And again, if Bitcoin continues to decline, we will see a larger bloodbath when it comes to altcoins. When it comes to Solana also is following Bitcoin's price action, and we got a really nice move upward. Taking a look at the daily doesn't look great. Again, if we lose 137, which I'm not saying we will, I would probably look between 115 and about 140 here. Okay. And as far as Ethereum goes, even with Ethereum, it was rumored. Okay. It was rumored that we are going to see the Ethereum spot ETF on July 2nd. And this was from a Bloomberg analyst that said it. So I'll cover that. Ethereum is looking okay. Not super great though. Not super great. It's looking like we might fall to about $3,300. Now, that being said, Mr. Eric, he said, we are moving up our over under date for the launch of the Ethereum ETF to July 2nd. He posted this on the 14th, and I believe that was Friday. Yep, it was Friday. So basically here he's talking about the Ethereum ETF. He thinks it's going to be launched to July 2nd. He cited reports of the SEC staff giving responses to ETF issuers and believes the process won't be delayed. We don't know, though, because again, Gary Gensler wasn't very optimistic about it. SEC comments from the S1 forms are described as pretty light and not significant. The SEC requested the form revisions to be returned within a week.
And Mr. B suggests there's a decent chance the SEC will declare the forms to be effective the following week. SEC could still finalize approvals before Independence Day holiday, but it's still uncertain. So again, it's a waiting game at this point. So just be careful. Don't be using crazy leverage. Now let's talk about Dogecoin. So Robinhood records large Dogecoin transfer. What does this mean? Well, a lot of people might speculate that because of this large transfer, that the person that transferred the large amount of Dogecoin to Robinhood, they're just going to dump on the open market. But I'm not sure. Let's go ahead and cover this together. So basically the transfer was for $13 million worth of Dogecoin, and it went to Robinhood from an unknown wallet. And the first large transaction of Dogecoin to Robinhood was June 5th. With 32.6 million worth of Doge that was sent there. During quarter one, users on Robinhood held around 7.3 billion worth of Doge, and it's the second most popular token on Robinhood after Bitcoin, which makes sense because everybody loves Dogecoin. So is Dogecoin going to pump? I don't know. Let's take a quick look. I don't think it's going to yet. I feel like with the bearish action of Bitcoin, we're entering a little bit of scariness. A little bit of scariness over here. So we'll see. But this is Dogecoin. This is the weekly. This doesn't look good. We are in a consolidation range of 13 cents, but we may drop. Eek, not looking great. She is holding on for dear life. And the next area of support is going to be here at about 11 cents. And then it's going to be here at about 10 cents. And then it's going to be here closer to like the 8-cent area. So just be careful, Dogecoin. That sucks. That sucks. I got a moon bag of Dogecoin. What's going on? Make sure you guys smash a like and share this. Let's get this out to more and more people. We have almost 400 people in here. Alpha Gamer said, fun fact, Bitcoin ordinals and runes are traded on Magic Eden. Did you know that they have a technical charts from TradingView integrated into the platform for free? Shout out to Gamer. Gamer's always dropping some alpha here. And shout out to all the channel members here. If you want to become a channel member, I'll shout you out. To John, to Gamer, to Mr. R. Did you not enjoy the clickbait? Got a clickbait, baby. To Mr. D. To Alexandra. To Mr. Mike. Who else? I got Ajit. I need to eat. Anyways, we have a poll at the top. What's your top crypto pick? 67% say XRP. They do. All right. What else is going on? We talked about this, yourmom.com. Ooh, this one. This is from Fidelity. Okay. I'm not going to play the video for you, but this is from Fidelity Digital Assets, and they sent this out. When Bitcoin Network reached block 840,000 on April 19th, it triggered the halving, which also launched the Runes protocol. Watch the 60-second video about it. So they're shilling, Fidelity Digital Assets is shilling Runes. If you are not paying attention to Runes, we've been talking about this since almost the beginning, and shout out to Gamer for helping me a lot with this content. But again, you guys, Runes, Dog Go to Moon, which I own. Shout out to all the dog holders. I had to actually buy runestone ordinals to get the airdrop. But basically, they just talk about the tech behind the protocol and the benefits it provides. Fidelity said they will be watching to see if Runes evolves into something bigger. This is bullish. If you're not bullish on Runes, you should be. And shout out to Mr. Leo. So there's that. Now let's get into some ghetto-ness over here. All right. So it was leaked over the weekend. Biden officials will attend Bitcoin Roundtable in DC, and was a leaked report. The roundtable is being spearheaded by Rep. Kona, which is a blue person, a pro-crypto politician who supported Fit 21 bill. I love to see it. This is great. But why couldn't they just announce it? Why did it get leaked? Why is it always a drama? Why? Whatever. I'll take what I can get at this point. So basically, the roundtable is going to include Cuban, who recently criticized Gensler, and it's going to be in Washington next month. And Cuban also claimed Gensler's anti-crypto stance could hurt Mr. B's re-election chances, and I agree. In 2023 of May, Mr. B compared crypto traders to wealthy tax evaders, and his administration published an economic report which heavily criticized Bitcoin and POW mining, and they also promoted a CBDC. So I'm glad. This is the silver lining here. I don't trust them at all, but the silver lining is they're actually making an effort to understand, or at least make us think that. So hey, I'll be with it. But with that being said, this is the big story here. SEC's head of crypto asset and cyber unit departs after nearly 9 years. David Hirsch, the head of the United States Securities Exchange Commission crypto asset cyber unit in the division enforcement, has left the agency after 9 years. Why? That's crazy. He said, the past Friday was my last day with the SEC after 9 years. During that time, I had the opportunity to work on more complex, challenging investigations and issues that I have ever imagined when I joined the agency as a staff attorney in the Fort Worth regional office. I'm particularly proud of the historic work done by the crypto assets and cyber unit team I had the privilege to lead.
What's going on? What's going on? We don't know why he left. He didn't disclose his future plans. But the interesting thing about this is, why would he leave during this time? The last time people from the SEC, or people left the SEC, was 2 attorneys. It was from the debt box case. Why did they leave? Well, because they screwed up the debt box case. So we don't know. Like, we don't know what's going on. But it's very interesting timing that they decided to leave. Or that this guy decided to leave, right? Very interesting. I don't know. What are your guys' thoughts? Why do you think he decided to leave? It sounds suspicious. And also, too, Senate bill could open crypto to U.S. sanctions, but industry trying to head it off. Let's talk about this. This is important. So the Senate bill includes a provision to prevent crypto to use in tea, which no crap. Nobody in crypto wants to support tea in any way, shape, or form. The provision requires crypto industry to identify users, but it was not publicly discussed. He doesn't work for Pump.Fun. It's a troll. Okay. So back to the SEC thing, the SEC cybersecurity guy, he didn't leave to work for Pump.Fun. It was a troll on Twitter, and it's not real news. Okay. So make sure y'all do your due diligence, because if it was real, he would have announced it, but he didn't. So please don't believe that stuff. Okay. Be very careful. Be very careful of the stuff that you read. But as far as this goes, it automates sanctions on foreign digital asset facilitators linked to T. Provision may be removed from the bill during pushback, and I think it should. The reason why they should remove it is because you need to have a proper system put in place before you implement something like this, okay? And when we're talking about DeFi, you can simply see on chain who is doing what. So maybe the public servants need to get it together and have better protocols put in place before they institute something like this. That's all I'm saying. That's all I'm saying. The bill's language could impact central banks issuing CBDCs and software developers. It's not a good bill. It's not good. We don't like it. We don't like it. We don't like it. We don't want it. This is the thing. I will tell you right here and now, I think it is a fantastic idea to compromise with people on things when it comes to regulations, but I will not compromise my privacy. I am a law-abiding, tax-paying citizen that discloses everything under the sun. And so are you. And we should not be, our privacy should not be impacted because of bad actors. That's not the way it works. All right, so there was some drama that happened with Binance. I'm not going to post the screenshot. Gamer sent it to me. It was horrible. One of the things I'm going to say is you shouldn't be judging people by the way they look on the outside. Well, obviously, like if you see somebody and they give you like scary vibes, or like you feel like they're going to cause you harm, yeah, you should judge them, listen to your instincts. But like you shouldn't. Binance, whoever the intern was that was posting on their account, it's just dumb. Who cares about like the differences that make us unique? I don't care about that. If you're a good person, I rock with you. I want to be friends with you. Okay. I want to be friends with you. But this story here is stupid. Binance co-founder CZ holds approximately 94 million BNB tokens worth $56 billion, which is 64% of BNB circulating supply. I'm going to break it down to you. Okay, I'm gonna break it down to you and tell you why this is wrong, because they're bad at math. And this is, I believe her name is If I mispronounce it, I apologize. Wonderful person, apologize. But let's talk about this story. Okay, so they basically were describing BNB to FTT. That's what they were doing in the article, which is stupid, number one. But basically, they were saying that he holds 64% of the supply, but he doesn't. Binance owns 71% of the BNB supply, which further consolidating CZ's control over the token. But the tokens he does acquire are through the ICO and company shares. So that's what it is. And they just did it. They did it incorrectly, which was wrong. But again, Forbes and all these other companies love to attack Binance time and time again. Why? I have no idea why, but they love to do it. It's stupid. Also, too, U.S. government seizes over $5 billion in JP Morgan Chase bank accounts, alleges funds stolen in sophisticated scheme. The reason why we're talking about this is because there were 6 accounts at JP Morgan, and these funds are all alleged proceeds of a fraud scheme. A Massachusetts union worker was tricked into wiring $6.4 million to scammers. Some funds were rerouted to crypto exchanges. $5.25 million went to JP Morgan accounts. So this is the thing. Why did JP Morgan allow this to happen? Oh, wait, I thought banks were safe. No, they're not safe. So this just further proves that
banks are not safe and they need to get it together. But anyways, on that note, I have to get going because I got a bunch of work to do. I got to join a space, but I'm going to be dropping a video for you guys, a really cool story that just dropped this morning. I'm going to drop it for you at 3:30 p.m. PST. So make sure you guys watch that video. It's going to be a good one. But again, thank you guys so much for rocking with me. I appreciate you. Make sure you guys comment and let me know what you want me to cover tomorrow, and I'll be sure to take a look. Thank you so much. Bye-bye. Bye, babies.